So we have ended with one more bad but rather interesting week on the Wall Street, and it's been there on the card that the overall trend, if you are looking at the US market, was very, very weak, and the weak trend continues. Okay, you may get some big bounce back in the meanwhile, but if you're looking at the overall trend, it is on the downside, and I've been talking about it for the last couple of weeks or rather months. And if the stock market is not going down, it is not going up either. So I mean, whatever is happening within the range right now, but the range is expanding, which is very clear. So does the trend. So let us see what has happened in the last 1 week and what will probably impact the market in the upcoming week going forward. But before that, if you haven't yet subscribed my channel yet, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. Now, number one, I don't want to talk about geopolitical things. Obviously, it does have an impact, but I don't support this statement. Allies pledge double down support for Kiev. I mean, what are you talking about? Do you want to stretch these things rather doing a table talk to settle things down or to calm things down? You want to do this double down kind of thing, and this is not going to improve the situation that any layman can understand. And obviously, it does have an impact not only on the stock market but on the economies as well. And we have seen what has happened in the last 1 year, how the global stock market, how the global economies, how the inflation plays out. And simultaneously, you can see that key Fed inflation measures rose 0.6% in January, more than expected, and the same thing, the impact of the same is completely visible on the stock market and other financial instrument. Okay, so these things are not at all positive. This inflation is not at all positive for now, because it is being backed by bad things, not by good things, which will support growth or which will support inclusion of different economies and different peoples. So this is not happening. Apart from that, Ericsson to lay off 8,500 workers as part of cost cutting plan. So things are going on in a very big manner. We have seen and we can see right now when there is a huge and massive cuts that's been followed, and it's going to continue. It's going to continue because beyond a certain point, no company no company can sustain, and employee cost is one of the major costs for all different companies. So this is going to impact majorly as far as the employee section is concerned across the globe. And cutting this kind of expenditure may help the financial report in the short term, but this is not a good way. I'm not being supportive to this thing, but it will all depend upon the situation, whether positive or negative. Because 2 years back, we know every people has 4 or 5 jobs. Right now, it's hard to find that. Apart from that, let us see. We will talk about Dow Jones and other market events, and let's see what else we have in front of us. So BASF to cut 2,600 job on high cost in Europe. So you can clearly see what is happening right now. Apart from that, I think this is most of it. So let us now go and check what has happened in the stock market and in different instruments, and that will give us an impact. And I will try to explain the overall trend in a much simpler way so that you can understand what is going to happen not only in the next 1 week but what the overall trend is saying, which or where the stock market is going if you are looking at the next 3 to 6 months. Now, as of now, as far as the last Friday was concerned, Dow Jones down by 336 points, Nasdaq down by 195 points, S&P down by 42 points, gold is flat, oil up by 1 point, US 10-year yield is now very near to 4%. It went down to 3.3. Now it is trading very near to 4%. So again a spike. VIX up by 2%. So things are not at all looking good. Also, you can see the 6 month and 1 year yield. It is trading at 5%. So I mean, when you are getting for an economy like US, which is developed, and if you go back a year, you can clearly see that right now you are getting 5%, and if you go back 1 year, you are hardly getting something on that. So when you are getting, yeah, so you can clearly see 0.89, and if I go back, yeah, so it was 0.76 at the lowest, 0.76 to zero point 0.6 to zero point 0.8 when you are looking at the mid of 2021, and from there now you are getting 5% risk free rate. So why do somebody put their money in the stock market? I mean, it may not be very big for developing economies, but it is huge for developed economies. And the kind of interest rate hike we have seen, I mean, the interest rate in US economies is very near to the interest rate in lots of developing economies. So I mean, this is a very good interest rate. So obviously dollar will chase the safe haven. Apart from that, US dollar index, I have been talking about that for the last 1.5 months, that if it start trading above 100, 304, it will be considered as a breakout again. It went down to 101 and now it closed above 105. So this is not a good sign, and it's been there on the card for the last 2 or 3 weeks. If those who are watching my videos, I have been continuously saying this thing, that dollar index is moving higher, which is indicating something. And rather believing in forecast, it doesn't matter whether you are a 10-year veteran or you are a 100-year veteran. Everybody goes wrong, and rather than believing on what is about to happen, if I simply look at the data and the data is on the upside, I will believe the data rather than, or if I listen to everybody, but at the end of the day what the data is saying is completely different. So obviously it does have an impact. So the data is saying that the interest rate spike is going to stay, and right now we don't have any other option but to believe what the Fed members are saying, and they are saying that we are going to keep the inflation calm down by raising the interest rate. So you need to take this statement very seriously. Now let us see what is happening. So let's start analyzing the US stock market with dollar index. And dollar index, you can clearly see, and I've been saying this thing for the last 1 month, 1.5 month, that this is very much there. So after hitting the lows of 100, it the dollar index rose by 4.6%, and right now it is very near to its near term resistance, which is, yeah, we are 105.68 or 105.7. But the problem is, if it start trading above 105.7, then we will see further rise. Okay, so it is very important to see whether it is settling at or very near to 105.7, because if there is a breakout beyond 105.7, dollar index will move towards 108 and 109. So this is very important and interesting to look at what is about to happen going forward. So please be very much aware about this move which is happening and which will about to happen. And if dollar index went up to 108, 109, then obviously you will see the similar kind of impact in the stock market as well, because if you are looking at the overall range, this is the overall range which starts from 104, okay, which start from 104 and it can go up to 109. So just focus on this section. This is the active section right now. So there is a very high probability that dollar index will move towards 108 and 109. So this is one thing which we need to understand. Now talking about the indices, let us start analyzing the Dow Jones. And whatever has happened in the last 2 months, Dow Jones, the good thing is still trading within the range. So it has not been broken down yet. So this is something which is completely visible as of now. As of now. So the biggest support we have here is 32,610, 613. So it is one of the prominent support. Now the question is it sustainable or not? Okay, this is very big question we have in front of us. There is a probability that Dow Jones may move towards 34,300 and 34,600 because Dow Jones is trading in between a range. So there is, I mean, looking at the trend, there is a bounce back which may happen. But to analyze the bigger trend, you need to go to the weekly chart and you can see the indicator. What the indicator are saying. This is MACD and this is what you can see, the stochastic RSI. So indicator are saying something else, and that's why you need to be very much cautious about the trend, because if you are looking at the weekly chart, it is not at all giving you a very bright signal. But right now, if you are looking at the hourly chart or what has happened uh, in the last 2 months and what will probably happen is there is a potential bounce back which will start with 32,600, but whether it will sustain or not, that's a very big question. So work with a very strict stop loss. apart from that Apart from that, if you are looking at Nasdaq, which is the most volatile one, and uh, if dollar index continues to settle higher, it is not at all good for Nasdaq. So we have only one thing to look at as far as Nasdaq is concerned. If you want to go long, wait for the Nasdaq to sustain above 11,565 or 570. If it continues to trade below, if Nasdaq continues to trade below 11,564, 565, then we will definitely move towards 10,200, 10,300. So this is the risk that has opened again. So please be very aware, because what I'm talking about is 5-10% in the index, but it will have a very big impact, if you're looking at individual stock. So it's very important for the Nasdaq to settle above 11,560, 570 for an uptrend to resume. Okay, so Dow Jones is giving you a signal that it is near to its support, but Nasdaq is giving you a signal that the false breakout, it was a false breakout. Now Nasdaq is within the previous range, or the old range is now active again, and it is now moving lower. So this is not at all a very good signal. Now looking at S&P 500, it will definitely follow the Nasdaq, not the Dow Jones very much, and you can clearly see the move as far as S&P 500 is concerned. And if you want to go long in S&P 500, obviously S&P 500 must sustain above 4098, but there is a complete rejection of the breakout as well as the trend. It is now moving towards, here we are, 3767. So this next big support we have for S&P 500 is 3767, nearly 150, 180 point lower. Here we are. Let me show it to you. So from the current close, it is nearly 200 points lower. So this is something which we need to look at. Apart from that, VIX is very important, because VIX, there is an indication that VIX will rise, and VIX is indeed rising. I think I have made a post, or I have tweeted that there is a range breakout that has happened if you are looking at CBOE VIX. So this is not at all a good sign if you are looking at the overall market. So here we can see this is the price chart of VIX, and a breakout has already happened above 18.87, and you can now see the trend is reversing. So if it continues to trade above 18.87, the next two levels will be 25 and 34. So please be very aware about this fact that the VIX is rising. Also, I just follow one thing rather than what is happening. As I told you, what veterans are saying, just follow. If you are really doing something in the stock market, just follow your own analysis. That's very important. If you will go wrong, then try to fix what has been wrong, instead of listening to others all the time. Now there is one very clear thing which you can see, an uh, inverted yield curve, and it's been there for the last couple of months. I have already told this thing very clearly that it will definitely have a negative impact on the economy. How much impact you can see on the stock market is a different thing, because in the last two instances in 2000 and 2008, where the yield curve inverted, there was no QE. But right now we have big QE, and central bank will start jumping in if the stock market falls below a certain point. So there is a degree of safety that is there, but it does not mean that it will save the economy. It will definitely have a big impact on the economy, because until and unless the inflation goes down, when will it go down? Nobody knows about it as of now, because it does not based on fiscal or monetary measures. There are economic issues, there are geopolitical issues, there are geographical issues, there are natural disaster calamities. There are lots of things which are going around, and that will have a disastrous impact. Okay, it's not like you have some textbook statements and you can control the inflation. So these are some of the things which we need to understand. So I don't want to stretch this session beyond a certain point, because things does not look good as of now. And I mean, just answer this question. I want to know your comments, I want to know your views. So let me know in the comment section. I mean, if you are in states, and if you are getting a risk-free rate of 5%, why the hell do you want to invest in stock market? I mean, for the short term, until and unless you know about the stock market, you have an experience in the stock market. Let's say you are a new person, and you know the market is volatile. That's what you have as far as information is concerned. So where do you go? You are now getting, I mean, if you go back 1.5 year, you are not getting even 1%. Now you are getting 5% in a 1 year yield. So obviously, which one do you choose? Because you are simply getting a risk-free interest rate of 5%. And it's been very rare in the developed economies, because once inflation settles down, obviously the 5% is not going to be there. It will again go back to 1% or even below that. But that time is that will be a time, but that's not the time which we can talk about right now. Right now you are getting something very interesting, and even for 6 months 5.11. So these are very good interest rate. I'll tell you, if not only for developed economies but for developing economies as well, and those who have millions or billions of dollars, these are very very good interest rate for them. They don't bother about risking their money for 10, 15, 20% return, when they get risk free return of 5.5%. And this is going to increase, because central bank is already signaled that. So I just want to know your views. Apart from that, I think rest will be fine in the near term, because the dollar index keeps on moving higher. We need to see what's actually going on, because things, I mean, as far as the price move is concerned for index, uh, Dow Jones is very near to its support, but the overall market, or if you're looking at the companies, those are mostly Nasdaq based companies. So there lies the big momentum on both the side, and it is not at all giving you a very very bright signal as far as the price action is concerned. So be aware about the move, what has happened. There may be a short term bounce back or short term recovery, but the problem is whether that will be a genuine bounce back or a dead cat bounce. That is something which we need to look at in the upcoming days, weeks, or probably months. So please be very aware about that. So this is the end of the video. Thanks for watching.